Hello, friends. Good evening, all of you. So, let us start this divisional transfer pricing chapter with the remaining topic. We have covered the way of finding transfer pricing between two divisions in any organization. We have understood this that generally nowadays organizations are decentralized organization. It is good to have a decentralized organization. There are many benefit of having decentralized organization, and if any company have decentralized organization, in that case the organization will have different divisions, and in that there might be some condition arises where we need to transfer some goods, services, or some other things like intangible assets from one division to another division, and for that we need to find out the transfer price. Okay, so this is all we have studied so far. Now in today's session we will be cover about uh, this transfer pricing, finding the transfer pricing or considering the transfer pricing, while considering some other conditions also, like if the fixed costs are not constant, or if we have some other option, like we have option to transfer the goods to division, some other division, or we have some special order also. Likewise, there might be some other conditions which we have to consider and to decide the transfer pricing. Okay, so we will cover that. And also, in case if my organization have in case if my organization have division in different countries, like I have a multinational company, I'm an owner of multinational company, and my one division is in China, one division is in India, one division is in Japan, and I need to transfer the goods, the product from one division, means I want to transfer something from Japan to India, or from India to China. So in such case, what will be the transfer price? Because we know that the fiscal policy is different for different country. We know the taxation is different, laws are different. So how will we find the transfer pricing in such case when we will transfer the goods from one country to another country? Means if we have a division in one country and another country, and we are transferring the goods from one division, means from one country to another division which is in some other country. So in this way, how will we find the transfer pricings? Okay, so this is an international finding the transfer price in case if we have international transaction. If my company or organization is an international organization, then in such case, how will we find the transfer pricing? So we have the questions related to this. Okay, we will do the questions related to this in today's session. Okay, and one more topic which we will cover today is that in case if there is conflict between the manager of two division regarding the way to find the transfer pricing, if we have conflict between the divisional manager, then how to resolve that conflict? Okay, and for that we have these two proposal, and we will use these two proposal to solve the conflict between the two managers of different divisions. So these are the topic which we will cover in today's session. Okay, now let us start with this example we have. I hope you all have this presentation with you, and I want all of you to please read this question. And this is an example. Sorry, please read this example. And for solving this example, you can use the information of this image. We have drawn this image, and you can use this image to solve this question. Okay, so we have this example. Please read it. And in case if you have any doubt, you can ask me. Okay, please read it. And if you have done the reading, please let me know. This is the question which we have, an example which we have, and I want all of you to please read it. And you can use this image to understand the question. Okay, once you read it, then we will discuss this question. Okay, so I want all of you to please read this question first, then we will discuss this question. In case if you have any doubt, you can ask me. We have this question. I just want all of you to just read it once, then we will discuss how to solve this question. Please tell me if you have done the reading of this question. Quickly tell me if you have done the reading of this question. Quickly tell me. Please read this example and quickly tell me if you have done the reading of this example. Read this. Read this example and quickly tell me if you have done the reading of this example. I hope the question is clear. It is visible to all of you. Yeah. Please read it quickly and tell me if you have done the reading of this question. Read it quickly. Shall we discuss? Okay, you have done the reading. Now let us discuss this question, this example, a very good example we have. Okay, now let us read this example. A company has two division, division A and division B. Okay, so we have mentioned here that we have two division, division A and division B. Okay. These two division, they're making product A and product B respectively. So it means that you are producing product A from division A and you are producing product B from division B. Okay, one unit of A is an input for each unit of B. So for the production of product B, you need 1 unit of A. It is mentioned here. Okay. B has a production capacity of 45,000 units. So we have also mentioned here that the capacity of division B is 45,000. It is mentioned here. The capacity of division B is 45,000. It is mentioned here. Okay. Okay. Now next, other information available regarding division A are capacity of division A is to produce 50,000 units. So division A can produce maximum 50,000 units. Division A can produce, the capacity of division A is to produce 50,000 units. Okay. Now, the maximum external sale is 30,000. So the maximum external sale of division A is 30,000, since all these information are related to division A. Okay. Okay. Now, fixed cost, if you produce up to 30,000 units, since they have capacity to produce 50,000 units, but if you produce up to 30,000 unit, if you produce up to 30,000 unit, in that case, the fixed cost will be 4,30,000. In that case, the fixed cost will be this. And in case if you want to increase the output with additional 10,000 unit, you need to incur 50,000 more fixed costs. So in this case, if you want to produce all 50,000 units, for every 10,000 unit, you need 50,000 fixed costs more. So here you can see you need 20,000 more units. है ना? With every 10,000 units, you can see here it is mentioned here, in case if you want to have additional 10,000 unit, the fixed cost will increase by 50,000. Okay. So if the output is increased from 30 to 50,000 unit, you're increasing 20,000 unit. It means that the fixed cost will increase by 50 plus 50, that is 1 lakh. Okay. So the total fixed cost will become 5 lakh 30,000. Hai na? 1 lakh. We will add 1 lakh to this value. Now, the variable manufacturing cost is rupees 55,000. The variable manufacturing cost here is 55,000. The variable selling cost, if you want to sell these units, this variable selling cost, if you want to sell the goods to external market, you need to incur selling cost of rupees 10. You need to incur here selling cost of rupees 10. And if you are transferring the goods within the organization from one division to another division, then the variable selling cost will be rupees 5. And for special order, in case if you have any special order, then for that special order, you also need to incur the variable selling cost as rupees 5. You have to incur this rupees 5 variable selling cost. Okay, the selling price per unit in external market. In external market, you can sell these units for rupees 80. Okay, and special sale, in case if you have special order, in that case the selling price will be rupees 70. Okay, special order, for special order. Okay, so these are the conditions mentioned here. B can buy the input A from outside at a slightly incomplete stage for rupees 45. Now, division B can buy the same product from outside external market. This division can buy the product from external market at rupees 45. But they can't use the product as it is. There is need to do some changes in this product, for which you need to incur 30 rupees per unit. Okay, in order to match this external product with product A, so that they become the same. So you need to incur this cost if you want to buy the product from external market for division B. Okay. Okay. Division B is willing to pay maximum rupees 75. Now this division B, see, the total of these two value is, I think, 75. Okay, so it means that they can buy the product from external market at rupees 75. So the division B is agreed to pay maximum rupees 75. Okay, for the product A. Okay. So division B is willing to pay maximum 75 if division A supply the entire demand of 45,000 units. So if this division A agreed to supply the entire unit, if this division A agreed to supply the entire unit, wait. If they want to buy this entire unit, wait, sorry. Yeah. If they want to buy this entire units, this division B require 45,000 unit in their organization. They need 45,000 unit in their organization. They need 45,000 units in division B. So they are saying that if you buy entire 45,000 unit from division A, if you will take entire 45,000 unit from division A, in that case, you can quote the price as 75. The transfer price you can quote as 75 if you are taking entire 45,000 units. ठीक है, if division A supply less than 45,000 unit, means lesser quantity, then division B is willing to pay only 70 rupees as a transfer price. So I hope you understand. Division B is willing to pay transfer price rupees 75 if entire 45,000 units are supplied by division A. However, in case if division A is saying no, we can't supply 45,000 unit, we can supply less than 45,000 unit. In that case, if division A is supplying units less than 45,000, in that case, division B is agree to have a transfer price not maximum then not more than rupees 70. Okay. Division A has also received special order of 15,000. See, this division has also received a special order of 15,000 units. Okay, they have special order, which it need to either accept in full or reject. Means you can accept the full proposal, means producing 15,000 units, or completely reject this proposal. You have these two options. ठीक है. Division A may choose to avoid variable cost rupees 5 on transfer to B or special order by incurring fixed costs. We will discuss this later on. Now they are asking you the question, what is the best strategy for division A? ठीक है. What is the best strategy you will suggest to division A? Okay, that will increase the profitability, that shows the profitability. Now you can see the choices they have now. Okay, the choices they have now. What are the choices they have? See, you can see here this division A is producing how many units? 50,000 units. Division A is producing 50,000 units. Okay. Now they have, see, I'm writing the option they have. They can transfer the entire 45,000 units. Sorry. They can transfer the entire 45,000 unit to division B. Okay. And they can sell the remaining unit to external market. Remaining unit, how much? 5,000 units. Okay. Market. This is the option they have. Their maximum capacity is to produce 50,000 units. So their first option they have is to fulfill the requirement of division B, 45,000, and then sell the remaining unit to external market, because you cannot fulfill the special requirement. In case of special requirement, you have to supply 15,000 units. So the next option they have, division A. Next option, they are producing 50,000 units. They are producing 50,000 units. So the next option they have, they can fulfill the special order. Special order of how many units? 15,000 units. Okay, they can fulfill the special order. Now they can transfer the remaining unit to division B. This is the next option they have. How many units will come here? I guess this is 35,000 units. Okay, so in this case, the transfer price will be rupees 70, because they are saying that if you will supply less than 45,000, then the transfer price will be rupees 70. And in this case, the transfer price is rupees 75. So this is the next option you have. More option. Let us see if we have more option. Yes, we have some more option. What? Division A. Division A has option to transfer special good. Special order. They have option to fulfill the special order of 15,000 units. Okay, and then sell the goods to external market. Remaining goods, how many? 35,000 units. You can sell the remaining goods to external market. ठीक है, and some more option like you can transfer some of the goods to division B, ठीक है. Fourth option, you can transfer some division A can fulfill the special order or of 15,000 units, and they can transfer some of the goods to external market and some of the goods to division B, ठीक है. So you can see that we have many option, many condition may arise, है ना, many option. The capacity of division A is to produce maximum 50,000 units. They cannot produce more than 50,000 units. You can see in the question, they cannot produce more than 50,000 units. So out of 50,000 units, they have first option, transfer the entire 45,000 units to division B, because in that case, you will get the transfer price as rupees 75 and the remaining unit to external market. ठीक है. Second option you have, you can fulfill the special order. In special order, you are getting rupees 70. ठीक है. Fulfill the special order and you can transfer the remaining to division B. But if you are supplying less than 45,000 units, then transfer price is rupees 70. And some other option like you can transfer, you can fulfill the special order and remaining unit you can sell to external market, means you are transferring in division B, you are transferring nothing. Or you have option fulfill the special order, few quantity to external market, few quantity to division B. So in this way we have many conditions. ठीक है. Now out of all these conditions, which choice we will select for the organization, which is beneficial? Okay, we will consider the contribution, the profitability in all these cases, and we will see the most profitable condition for the organization, and we will choose that for the organization, that yes, this is the most profitable condition for the organization, and that is why we are choosing this for the organization. Okay, out of all these conditions, we will see the most profitable condition. I hope the question is clear to all of you. Okay, I hope the question is clear to all of you. In case if you have any doubt, you can ask me. In case, is the question is clear to all of you? Please tell me. The question is clear? Tell me quickly, the question is clear to all of you? Quickly tell me the question is clear. Now in this question, we have this one more condition which we have to consider while solving the question. Okay, what is this condition? Division A may choose to avoid variable cost of ₹5 per unit. You can see that the organization is incurring variable cost of ₹5, okay, while transferring the goods from division A to division B. Okay, they are incurring what? Selling expenses, selling cost, variable selling cost of ₹5 here. ठीक है. Or when they are transferring the goods from division A to fulfill the special order, they are incurring the variable selling cost as ₹5. ठीक है. Now they are saying that you can avoid this variable selling cost. You can avoid it by incurring fixed cost of ₹50,000. ठीक है. By incurring a fixed cost of ₹50,000, you can avoid this variable selling expenses. Now for this, we will check one more condition, because while deciding the profitability, we need to consider the cost also, the variable cost also. ठीक है. But in this case, they are saying that you have two options. You can incur for the organization for transferring the goods from one division to another division, or for transferring the goods to external market. You have two choices. What two choices you have? You have one choice. First choice is that you can sell the, you can have the variable cost of ₹5, and the other option is to have fixed cost of ₹50,000. Okay. Now, how will you decide which is better? To have variable cost of ₹5 per unit, whether it is good, or to have a fixed cost of ₹50,000 per annum, which one is more better option for the organization? Now, for this, what will we do? Can you tell me what will we do to decide for the organization whether it is good to have the variable cost, variable selling expense of ₹5, or the fixed cost of ₹50,000? Out of these two things, which one is better? Can you tell me? Okay. See, for this, we will try to find out the indifference point. Indifference point means, suppose X unit we are producing and we are having variable cost of rupees 5 per unit. So this is the total variable cost. Total variable cost is equal to total fixed cost, which is rupees 50,000. Okay, so X means 10,000 units. So if you will produce maximum 10,000 units, then in that case, if you are transferring maximum 10,000 unit, then in that case, it is indifferent whether you incur the variable cost, whether you incur the fixed cost. But yes, if you produce more than 10,000 units, if you produce more than 10,000 units, then in that case, we will advise to have fixed cost. है ना? But if you are producing less than 10,000 units, if you produce in your organization less than 10,000 units, then in that case, we will advise to have variable cost per unit, because in that case, variable cost per unit will be the total cost of variable cost per unit will be less. But if you produce more than 10,000, in that case, the fixed cost per unit will be less. So I hope this point is clear to all of you. See, this point is clear. These two lines is related to this point. Okay, first you tell me that whether this point is clear or not. Okay, if it is not clear, I will repeat that. This point is clear or not. See, the organization has two options. They are transferring the goods. They have two options for what? We have division A. Okay, we are transferring the goods to division B. Or we have option to fulfill a special order. Okay, special order. It is mentioned in the question that if you will sell the goods to external market, you will incur the selling expense as rupees 10. Okay, this is the variable selling expense. And if you will transfer the goods from division A to division B, the variable selling expense will be rupees 5. Okay, variable selling expense will be rupees 5. If you will transfer the goods from division A to fulfill the special order, the variable selling expense will be rupees 5. Okay, these are the expenses which you will incur. Now they are saying that, see, we have to consider the cost, we have to consider the selling price cost in order to find the most profitable option. Okay, we have all these options. In order to find the most profitable option, we have to consider the selling price or the transfer price minus all the cost. Now they have given you two choices, either to have variable cost or fixed cost. Okay, they have given you two choices. Either you can incur the variable expenses, these variable expenses 5 rupees per unit, or you can have the fixed cost here, fixed cost. Okay, now for this they have mentioned you that they have given you the information here. Okay, they have given you the information here that you have option, either you can incur the selling cost as rupees 5 per unit, or you can have the fixed overhead expenses as rupees 50,000 per annum. You can choose out of them. Okay, now for that we have found the indifference point. We have found that if we will produce 10,000 unit, if we will transfer 10,000 units from one division to another division, or we are transferring 10,000 unit from one division to another division, then we are indifferent whether you incur the variable cost per unit. Total variable cost will be equal to total fixed cost. So it's of no use to consider it. But if we transfer more than 10,000 unit from one division to another division, like if we are transferring 40,000 units, if we transfer more than 10,000 unit from division A to division B, in that case, it is good to have what? It is good to have fixed cost, not variable cost. Fixed cost is what? Whatever is the fixed cost. what is here, 50,000 is the fixed cost. It is good to have 50,000 fixed cost if you transfer more than 10,000 unit from one division to another division, or you are fulfilling the special order. ठीक है, 15,000, ठीक है, तो 10,000, more than 10,000, in that case it is good to have fixed cost. This point is clear or not, please tell me. It is very important point to consider. Whether this point is clear or not, please tell me. Please tell me this point is clear or not, quickly. If you have any doubt, you can ask me, and please tell me everything is clear up to this point. Ambika, clear. Okay, very nice. Now, can you suggest me the best strategy for the organization out of these? See, the first choice, the second choice, the third choice, and the fourth choice. Out of all these choices, which choice is better for the organization? ठीक है? Can you suggest me? ठीक है? Can you suggest me which choice is better? I'm giving you time to think about it. ठीक है? Again, can you suggest me the best strategies? ठीक है? Which one is best strategy in which you will have maximum profit? If you have the maximum profit here, you will suggest this. If you have maximum profit here, you will suggest this. If you have maximum profit at this place, you will suggest this. Or if you have maximum profit at this place, you will suggest this. So can you tell me out of all these options, in which option you will have the maximum profitability? We have considered the cost. See, we have considered the variable expenses also, that if we transfer more than 10,000 unit, like in first case, you are transferring more than 10,000 unit, then in such case, they will incur fixed cost, है ना? If you will transfer more than 10,000 unit, you will incur fixed cost, not a variable selling expenses. This is what we have already discussed. I hope it is clear to all of you. We have discussed regarding the selling expense. We will incur, if we will transfer more than 10,000 unit, then we will incur fixed selling expenses as rupees 50,000, not variable selling expense. We will not incur this. We will avoid this, and we will have this. We have two options, and out of those two options, we will adopt this. Okay, so cost is important, selling price is important to decide the profitability, and that is why we have considered this. Now, can you suggest me out of all these options, which option is better? I want all of you to give me the answer. Can you suggest me the best strategy for the organization and give me the reason? Okay, with reason. Can you suggest me? Oh, very nice. I got answer from Raman, and your answer is correct. Very nice. Very good. This question is in your book. See, you are asking me. You can see the point. Different demand level. This is the topic. Different demand level in your book. You can see it is given in your book. This example is from your book. Please see all the questions. This example is in your book, and if you can see the page number, please tell me the page number so that I can share with other student also. Okay, please tell me the page number if you know the page number. Okay, this is in your book. Okay, you can see this example in your book. Now, can you tell me which option is better? Which strategy will be better? Raman has given me the right answer. So I'm waiting for you. Can you tell me the best option? Can you suggest me the best option? Which option is better? Okay, let me discuss this now. For finding the better option, what we can do? We can see here the option which we have. Okay, we can see here the option which we have. What are the options which we have here? See. We have all these options. First is transfer to B 45,000 units. Okay, this is the first option which we have. You can see here, we have taken the first option that we have capacity to produce 50,000 units. Out of these 50,000 units, we have decided to transfer 45,000 units to division B. So this is the first option which we have, that we have decided to transfer 45,000 unit to division B. In that case, what will be the selling price? We can see it is mentioned in the question that if you will transfer the entire 45,000 unit to division B, they can quote the transfer price as rupees 75. It is given here. Okay, it is given in the question that if you will fulfill the entire demand of 45,000, in that case the transfer price will be 75. So the revenue which they will get, the selling price of, in this condition, the selling price will be what? The selling price in this case will be what? 75. Okay, so this is the first option which we have. Okay, now the next option, what is the next option? If we are transferring less than 45,000 units to division B, this is the second option we have. We are transferring less than 45,000 unit in division B. Okay, so the next option we have choose here, transfer less than 45,000 units to division B. Less than 45,000 units to division B. In that case, it is clearly mentioned in the question that if you will not transfer the entire 45,000 unit, it is clearly mentioned if division A supply less than 45,000 unit, in that case, the transfer price will be 70 rupees. So if you will transfer, second case, if you will transfer less than 45,000 unit in division B, the transfer price will be rupees 70. Okay, so in this case, the transfer price will be rupees 70. Okay, so this is the second option which we have. Now let us see the third option. What is the third option? We are not transferring the good to division B. We are fulfilling the special order and we will sell the remaining good to outside market. So the third option which we have is special order. We are fulfilling the special order of 15,000 units. Okay, in that case, the transfer price will be 70. The selling price is rupees 70. It is also mentioned in the question that if you will fulfill the external special order, okay, then in that case also you will recover rupees 70. Okay. Okay, you will recover rupees 70. It is given in the question. Okay, it is given in the question. So I'm considering here rupees 70. Okay, now the next option. Okay, so these are the options. The next option is that the fourth option. If we are selling to external market up to 30,000 units. Okay, if we sell to external market up to 30,000 unit, then what will be the selling price? See, it is given here that the external sale is 30,000. The maximum unit which you can sell in the market is 30,000. If you will sell the maximum unit to external market, the selling price per unit will be rupees 80. Okay, so if you will sell the entire unit, the entire order, external market order of 30,000 unit, then the selling price which you can earn is rupees 80. Now we have to see which option is better. Okay, in which we can earn more profit. We will try to find out that. Okay, accordingly we will suggest them the strategy. Okay, now here we will subtract all the costs which the organization is incurring. Okay, the cost, let us see the cost the organization is incurring. What are the costs? First is variable manufacturing cost. Okay, the variable manufacturing cost is rupees 55. We will consider this. Okay, and any other, see, special order, for special order the selling price is this. We will consider this variable manufacturing cost. ठीक है. And for external sale, we will consider the external variable selling cost as ₹10. ठीक है. We will consider these two values. First, we will consider the variable manufacturing cost. Variable manufacturing cost. What is the variable manufacturing cost? It is 55, mentioned in the question. 55, it is mentioned in the question. 55, 55. Now less the selling expenses. Okay, you can see that the variable selling expenses, if you sell the product in external market, the variable selling expense is what? If you will sell the product in external market, if you sell the product in external market at this place, you can see the variable selling expenses is ₹10. Okay, if you sell the product in external market, the variable selling expense is ₹10 here. Okay, while if you fulfill the entire 15,000 unit order, means you are transferring more than 10,000 unit, you will not incur variable selling expenses. है ना? If you transfer more than 10,000 unit, you can see here that you are transferring 45,000 unit to division B, means you are transferring more than 10,000 unit to division B. Then in that case also, you can see that the variable selling expenses will be nil. If we transfer more than 10,000 unit, we will incur fixed cost, not a variable expense. So the variable selling expense is nil in this case also. Okay, sorry, if we transfer more than 45,000 unit, this is less. Okay, if we transfer less than 45,000 unit, but we are assuming that we are transferring less than 45,000 unit, but more than 10,000 unit. In that case also, we will consider this variable selling expense as nil. So after considering them, what can we find the contribution? We can find the total contribution. So what is the total contribution here? After solving this, you will get a value of ₹15, 15, 15, and 20. You can see here, these are the value which we will get. है ना? So out of all these, which one is more profitable? This is the most profitable place. Means transferring the goods to division B, 45,000 unit, entire 45,000 unit. If you will transfer entire 45,000 unit to division B, if you will transfer the entire 45,000 unit to division B, that will be the most profitable situation for the business organization. Okay, and the organization will earn the maximum profit at this place. Okay, this situation. Out of all these situations, I have written 4 situations, but some more condition may arise. Okay, but you can see, since all these other values are same, so for any other choice, you can see the profitability will be minimum. Okay, and since it is very good for us that these values are equal, otherwise the question will become more complicated. Okay, if these value will not come equal, then the question will become more complicated. Okay, now in this case, you can see that you are earning the maximum contribution at this place. So for this condition, in this condition, the organization will earn the maximum profit. So this situation is better for the business organization. I hope it is clear to all of you. And in case if you want to ask me any doubt, you can ask me. Okay, please ask me if you have any doubt. In case you have any doubt, you can ask me. Okay. Okay, Ambika is saying that fourth option is better. Why fourth option is better? Can you tell me why the fourth option is better? Why? See, this is the contribution per unit we have calculated. Okay, this is the contribution per unit we have calculated, and if we multiply this per unit unit value with the total unit, if you multiply it with the total, you will the value will automatically increase instead of multiplying these values with the total. Okay, so in in this case, so in this case, you can see the situation one, in case of situation one, not in this case, because here you will get the maximum contribution per unit. Here you are getting just 15 rupees per unit, 15 per unit. Instead, you previously in first situation, you were having 20 into 45,000. So you can see that you will earn the maximum contribution when you transfer the goods, entire 45,000 unit from division A to division B. The situation one is the most profitable situation. I hope this example is clear to all of you. This is a quite tricky question. Okay? And always, before solving the question, always try to make such diagram that will help you to understand the question and to solve the question. If you have any doubt, you can ask me. If you have any doubt, you can ask me. Ambika, see, you are adding 15 plus 15 plus 15. See, these are different choices which we have. Okay? These are the different choices. Okay? If you are fulfilling the external market, for example, you are transferring 30,000 units in the external market and you are fulfilling 15,000 unit, fulfilling the special order. Okay? Since we are producing 50,000 units, okay, we have transferred 30 in external market. We have fulfilled special order of 15,000. Now, what is the remaining value? 5,000 to B. Okay? Division B. Now here you can see that here you are earning contribution 15 rupees. Here you are earning contribution 15 rupees. But and here you are earning 20 rupees. This is the condition which you are saying. Whether this condition is more profitable, or tell me whether this condition is more profitable. If I transfer out of my 50,000 unit from division A, if I transfer 45,000 unit to division B, and I'm earning 20 rupees contribution per unit. So total contribution I can calculate here. And I'm transferring the remaining unit, okay, 5,000 to external market, in which I'm earning 15 rupees. Now tell me whether this is profitable or this is profitable. Which situation is more profitable? Transferring the 30,000 unit to external market, then 15,000 to special order, then 5,000 to division B. Okay, I'm earning 15 rupees contribution here, 15 rupees contribution per unit here, 20 rupees contribution per unit here. The total contribution I will calculate. So total contribution, in which case total contribution is more, whether in this case or whether in this case. In this way, you can find in other situation also. In every case, you will find that in any case, this situation will be the most profitable situation. When you transfer out of 50,000 unit, you are transferring 45,000 unit to division B. In division B, you are getting the maximum contribution rupees 20. So the value is high and this value is high. If both the value is high, it means that this will result in the maximum contribution. You can calculate it. Don't calculate it like 15 plus 15 plus 15. No, 15 into the number of unit you are transferring. 15 into the number of unit you are transferring. 15 into the number of unit you are transferring. In that way, calculate the total contribution. I hope it is clear to you. Ambika, it is clear to you or not? Please tell me. Otherwise, I'll explain it again. Okay, now it is clear to you. Very good. Okay, now it is clear to Ambika. Is it clear to other student also? Please tell me quickly. Is it clear to other student also? Is it clear to other student also? Please tell me quickly. Now, please tell me quickly. It is clear to all of you. Okay. Now let us discuss the second portion of the question. I hope it is clear to all of you now. The second portion of the question, deciding the transfer price. The second portion of the question is, what will be the range of transfer price be under if the best strategy is chosen? The best strategy is what? Transfer 45,000 unit here, transfer 45,000 unit here, and transfer 5,000 unit here. ठीक है. Now what will be the transfer price in this situation? Can you tell me the transfer price in this situation? I'm waiting for you to give me the answer. Can you suggest me the transfer price? What will be the transfer price? The marginal cost plus the opportunity cost. ठीक है. And in case if you are incurring any other variable cost, ठीक है, for transferring the goods from one division to another division. Can you give me the answer? I'm waiting for you to give me the answer. Okay, let me discuss this. ठीक है, transfer price. Can you give me the answer or let me discuss this? Okay, it is clear. Okay, now let us discuss the transfer price. Transfer price is the marginal cost. In division A, what is the marginal cost? You can see 55 is the marginal cost. ठीक है, 55 is the marginal cost. Then what is the opportunity cost? Since we are transferring, we have the external market, ठीक है, and we are disrupting the sale of external market and we are transferring the goods to division B. ठीक है, so it means we are losing the contribution here. How much contribution we are losing? 80 minus all the variable costs which you have. ठीक है, 55, ठीक है, minus 10. ठीक है, in this way you will get that you are having 15 rupees contribution here and you want to recover that contribution. ठीक है, plus any other cost. You can see if you transfer the goods from division A to division B, you will have to incur either the variable costs on selling expenses of rupees 5 or you have to incur fixed cost of rupees 50,000. ठीक है, and you can see since we are transferring more than 10,000 units, so we will incur this fixed cost. And what will be this fixed cost per unit? 50,000 divided by 45,000 unit you are transferring. So this value will come as 1.111. So if you will add these value, you will get the transfer price. I hope it is clear to all of you. If you want me to repeat anything, I can repeat. ठीक है? It is clear. I know the question is quite tricky. The question is quite tricky. ठीक है? So this is the maximum price which division B is willing to pay. And what will be the minimum transfer price? Since there is spare capacity, they're producing 30,000, they're producing and selling 30,000 unit to external market and they can produce 50,000 units. So the minimum transfer price will be the marginal cost. है ना? So I hope it is clear to all of you. Sorry. I hope wait. See, since they have asked you to quote the range for transfer price, they have asked you to quote the range for transfer price. ठीक है, so we have to find the minimum and maximum price. ठीक है, so what is the minimum price? Minimum price, for minimum price we consider the marginal cost, ठीक है, plus opportunity cost if we have any opportunity cost, plus additional cost if the organization is incurring any additional cost. ठीक है, what is the maximum price? Maximum price is net marginal revenue or what? External buying price. ठीक है, so external buying price, at what price division B can buy the product from external market? At what price division B can buy the product from external market? You can see that they can buy the product from external market at rupees 75. है ना? and it is not given here the selling price of product B with the help of which we can find the net marginal revenue. So we will not consider that. We will consider the external buy-in price. External buy-in price is External buy-in price is rupees 75. We cannot calculate this value since external selling price is not mentioned in the question. Okay, so this value we have. Okay, and so this is the maximum price. This is the maximum transfer price. Rupees 75 will be the maximum transfer price. Okay, and what will be the minimum transfer price? Marginal cost plus opportunity cost plus additional cost, which is this value. Okay, 55 plus 15 plus 1.11. I hope it is clear. Is it clear? You want me to repeat? You can ask me to repeat. Yes. Ravi Teja is correct. Okay, you want me, Ambika want me to repeat 1.1. Why is 1.11? See, we want to calculate this. We want to calculate this minimum transfer price. How can we calculate the minimum transfer price? Marginal cost plus opportunity cost plus additional cost, if any. Okay, while transferring the goods from one division to another division. So here you can see we have to consider these things. First, what is the marginal cost of division A? Marginal or variable cost of division A. If you will go to the question, you can see the marginal cost is rupees 55. So the marginal cost is rupees 55 here. Okay. Then the second thing, what is the opportunity cost? Since we are not selling the goods to outside market and we are disrupting the sale and transferring the goods to division B, what will be the opportunity cost? Selling price minus the variable cost. Okay. What is the variable cost here? 55 plus selling expenses. 55 minus 10. The contribution per unit is here 15. We have already calculated it previously also. Okay. How can you calculate the contribution at this place? Selling price minus variable cost. What are the variable costs we have? 55 and 10 rupees. These two values. Okay, 65. So you can see here the contribution is rupees 15, which you want to recover. Okay, you want to recover this. Next is C. If we transfer the goods from A to B, we are transferring more than 10,000 units. है ना? So we will incur this additional fixed expenses, 50,000 rupees. We will incur this 50,000 rupees fixed cost, okay, extra. And we want to recover this 50,000 rupees from 45,000 units. We want to recover it from 45,000 units. So what will be this cost? Rupees 1.11. This is the fixed cost per unit for transferring the goods from division A to division B. The fixed selling expenses for transferring the goods from division A to division B. Okay? Fixed selling expenses is rupees 1.11. Okay? So in this way, you can get the minimum transfer price. I hope it is clear to all of you. Okay? In case you still have any doubt, you can ask me. I don't have any problem to repeat it again. Okay? Okay. If you still have any doubt, you can ask me. I hope Ambika 1.11 is clear to you. Okay. This is the additional cost you are incurring for transferring the goods from this place to this. Okay. This is additional internal selling cost. Okay. You can see here, we can interpret this from here. We are not considering the variable cost, this rupees 5, for transferring the good from internally, because we have option either consider the variable cost or consider the fixed cost. So we have already considered that if you transfer more than 10,000 unit, you have to incur the fixed expenses, 50,000. I hope it is clear. Please quickly tell me it is clear or not. Then we will proceed to next question. Quickly tell me it is clear. Please quickly tell me it is clear or not. In case if you have doubt, you can ask me. Now let us proceed to the next question. this question is related to international transfer pricing. International transfer pricing, what is international transfer pricing? When we have division in different countries, like in previous question we are considering that we have division of our business organization within the country, but what if our division are in different country? For example, one division is in India, another division is in China, and another division is in Japan, and we want to transfer the goods from India to Japan or from Japan to China. How will we find the transfer price in that case? How that will affect the profitability of entire organization? Now this question is related to that. Okay, so this is the question which we have related to that, and I want all of you to read this question. Please read this question. I'm giving you time. You can take the time, and I want all of you to read this question. Read it. Please read this question, and in between, if you have any doubt, you can ask me. This is very interesting question. Very interesting question. Ambika, I hope your doubt is clear. You can ask me if your doubt is not yet clear. If you have any doubt, you can ask me. And I expect other student to please read this question. This is the question which is related to international transfer pricing. This question is related to international transfer pricing. Please read this question, and if you have done the reading, please let me know that you have done the reading of this question. Please tell me if you have done the reading of this question. Very simple question. It's a very simple question. Now let us understand this question. Let us understand this question. A car manufacturing company has two manufacturing divisions in different countries. Okay. Division A is in India. In India, manufactures engines for the car. So the division in India, they are manufacturing engine for the car. It has capacity to manufacture 10,000 units each year. And the capacity of division A is to manufacture 10,000 units every year. Okay. The variable cost of production is rupees 8,000 per unit. And division can sell 8,000 engine externally to customer within India for rupees 11,000 per unit. Okay, so they are saying that they have capacity to produce 10,000 units and they can transfer 8,000 unit to external market. Okay, and the selling price per unit is rupees 11,000 if they sell the product in India. Okay. Okay, and the variable cost of production is rupees 8,000. Okay, these are the information which we have here. Okay. Other division, division B is in Italy. Other division is in Italy. Okay, that require 5,000 engine every year. So this division B require 5,000 engine every year to assemble them further into cars. So this division need engines to assemble them and to make a car. Okay, but this division is in Italy. It purchased these engines from a vendor in Italy at rupees 9,000. So this division, they purchase These engine, if they purchase these engine within Italy, market of Italy, okay, the purchase price is rupees 9,000 per unit. Okay. If division B were to purchase these unit from division A, transfer price would be 10,000 per unit. And they are saying that if division A transfer the engine to division B, the transfer price will be rupees 10,000. Okay. Since no selling expenses need to be incurred on internal sales, variable cost of such transfer would be rupees 7,000 per unit. Okay. They are saying that no selling expenses needed if you want to transfer the goods internally from one division to another division. You need not to incur any selling expenses. Okay. And the variable cost of such transfer would be 7,000 per unit. And they are saying that the variable cost will be 7,000 per unit. Okay. If division A accept the internal order from division B, if division A accept the order of sending this 5,000 units to Italy division, it will have to curtail some of the external sale. Okay. So if they want to fulfill this order, they have to disrupt this sale. Okay. They are saying that if they want to fulfill this order of Italy, 5,000 unit of Italy, they have to disrupt some of its internal some of its external sale in India, the sale which they are doing in India, they have to disrupt this. Okay. Tax rate in India is 30%, tax rate in Italy is 40%. Okay. Now the question is, determine if the company will benefit overall if division B purchase from division A. So you can see here in this question, division B have two options. What two option? First option, buy the 5,000 unit, they need 5,000 units, buy entire 5,000 units, buy entire 5,000 units from Italy itself, external market. Buy this 5,000 units from external market. Okay. Italy, external market. The first option they have. Second option, what is the second option they have? Second option is that buy 5,000, take this 5,000 units from division A. Okay, these two options. Division B can buy these 5,000 unit from external market, or they have option to take all these 5,000 unit from division A. Now you have to tell them why second option is better. Why second option is better? You have to tell them. Okay. Why taking the goods from division A is better? Can you do this question at your own? Can you suggest me here what we can do to find which is profitable? To take the product from division A is better, or to buy the product from external market is better? Which one is better? Tell me. Okay, you have done the reading. I hope you have understood this question. You can read it again if you want to read it, and always while reading, keep this picture in mind. Okay, we have this picture. If you don't have this picture, try to create this picture. If you will create this picture in a question, then it will be easy for you to understand the question and to solve the question. Okay, these in today's session, I know the questions are tricky. Questions are tricky in today's session. Okay, not easy questions. We are not doing easy question in today's session. I know that. Okay, so I expect this from all of you, that if you are doing these question in examination, please try to create this kind of diagram in examination. Okay, and tell me which option is better. Okay, can you tell me? Can you help me to find which option is better? Can you help me to find which option is better? I'm waiting for you to reply me. ठीक है? If we adopt, see, determine if the company will benefit overall if division B purchase the entire unit from division A. Means if we transfer entire 5,000 unit from this place to this, whether it will be beneficial for the company or not. See, if we transfer the entire unit from 5,000 to from division A to B, what will happen? First, we will utilize this capacity to maximum possible manner. Abhi, right now, what is happening here? Since we are selling externally 8,000 unit and we have a capacity of producing 10,000 unit, you can see here that we have 2,000 unit spare capacity. We have unused capacity, 2,000 units of spare capacity, unused capacity. We have this at this place. है ना? So in case if we are transferring the goods from this place to this, then what will happen? We will use the spare capacity and we will earn the contribution from here. है ना? We will earn the contribution from here. ठीक है? While producing these goods, we can earn the contribution from here. ठीक है? So this will be the benefit which we will have. Okay, but in case if we buy the goods from division A, ठीक है, in division B, since we are buying the goods from external market at rupees 9,000, and if we buy the same goods from division A at rupees 10,000, obviously this is expensive. You can see here. If you receive the goods from division A to division B, the transfer price is 10,000, which is more than the price at which we are buying the goods from external market. So you can see here, if we buy internally, if we buy the goods from division A to division B, if we transfer the goods from division A to division B, we will incur a loss of rupees 1,000 from each units. है ना? We will incur a loss of rupees 1,000 here. Okay, we will incur a loss of rupees 1,000 from each units, and since we are transferring 5,000 unit, so we will incur a loss on these 5,000 units. है ना? So we will receive a contribution profitability here. ठीक है? How much? You can see that the selling price is 11,000 and variable cost is 8,000. So the contribution is 3,000 from each unit. ठीक है? So we will earn more contribution, 3,000 more, if we use this capacity completely. ठीक है? And we transfer 5,000 unit from this place to here. ठीक है? But we have to incur this loss because previously we were buying the goods from external market and external market price was less, and if we receive the same goods from division A, this price is more. So it is better to buy the goods from external market. I hope it is clear to all of you. If it is not clear to you, please tell me. If it is not clear to you, I will repeat it. And since you can see one more point here, that the contribution you are earning at this place is rupees 3,000. Also, if you transfer at 10,000 rupees, the contribution at this place is also 3,000. Okay, so the contribution is same whether you transfer the goods to external market or you transfer the goods to division B, the contribution is same. But since we are using extra 2,000 spare capacity, so we will earn contribution on these 2,000 extra units. Okay, we will earn these contribution if we use the spare capacity, but we have to incur a loss on these units. I hope with the help of this you can find the net profitability of the business organization. But since the tax is given, we have to consider the tax. Such a simple question. Okay, it was an easy question, and you want me to repeat it? I can repeat it. Quickly tell me, you want me to repeat it? Okay, there is some question. Okay, so Ambika and Ravi Teja, I receive answer from you. Where are other student? Do you want me to repeat it? See, we have two options. We have option to buy the entire unit from external market or to receive the goods from division A. Okay, but in this question they have asked you to transfer the goods from division A to division B. Okay, they have clearly told you to transfer the goods from division A to division B. ठीक है, but what happen if we adopt this practice? Then what happen? You can see previously if we buy the goods from external market, we were incurring the cost just 9,000. But if you transfer the goods from division A to division B, you can see here the transfer price is rupees 10,000. है ना, 10,000. So in this case, you can see the expenses increase by rupees 1,000 on each units. And since you are receiving 5,000 units, so the cost or loss will increase this much for division B. Division B will incur this loss. This is the loss for division B. But since now in this case, what will happen? Division A previously had 2,000 spare capacity, which they are using now. And in both the cases, contribution is 3,000 per unit, whether they transfer the goods to external market or they transfer the goods to division B. In both the cases, if they use the spare capacity of 2,000 unit, they will earn contribution 3,000 per unit. And they will earn this total contribution. This is the total contribution they are earning. And this is the total cost they are having. ठीक है, so considering both of them you can find the net profitability. But yes, since here the tax is given, we have to consider the tax also. ठीक है, so out of the contribution you have to reduce the tax, and out of the loss you have to consider the tax saving, and considering that you can find the answer. If you have doubt, you can ask me. Is it clear? Is it clear or not? Please tell me the questions are clear or not. See, I'm trying my best to explain these questions. These questions are quite tricky. I'm trying my best to explain you these questions. Okay. So in this case, you have to consider the contribution for division A. Division A is earning extra contribution. How much? How much contribution they are earning on 2,000 unit? On 2,000 unit, they're earning 3,000 per unit contribution. Okay, so the total contribution here is what? 6. This is the total contribution they are earning. But yes, in India they are having tax, so on contribution you have to pay tax. How much? 30%. You have to pay 30% tax. Okay, so this tax is what? This tax is whatever 30% of this value. Okay, so this is the contribution which you are earning. After subtracting 30%, you will get the total contribution, which is what? Which is 4 2. This is the total contribution which you are earning. Now what is the loss of division B? You can see there is loss in division B. Why there is loss in division B? If you are buying internally, the price is more, 10,000, transfer price is more. Instead of buying from external market, the price was less. So they are having loss of rupees 1,000 on each units, and loss on entire 5,000 unit will be this. This is the total loss which they are incurring. Okay, but yes, you are saving tax, so less tax. You are saving tax here. On loss, you are saving tax. How much? 40%. You will subtract the 40% of this value. You will get the net loss at this point. Okay, which is what? Which is what? 3 lakh. Okay, so you can see here. So in this case, you can see here that we have total profitability, contribution, net contribution minus net loss. You have total profitability. Now I expect all of you to read the next question. I think there is some problem. This computer is hanged, so let me resolve the issue. Please read the next question. You can see here that we are having total profitability in this question. Yes, the loss, you have given me the net loss. You can consider the total contribution minus total loss, and in that way you can get the profitability of the organization. Jay ji, thank you. Now let us do the next question. Now let us do the next question of transfer pricing. I hope the question is clear. In case if you have any doubt, you can ask me. Now let us do the next question. This is the next question which we have. And I expect all of you to please read it. Okay, then we will discuss this question. ठीक है, read this question and then we will discuss. And in case if you have any doubt in previous question, you can ask me. You can see in previous question. In previous question, you can see that you were having loss in division B and you were having contribution in division A, but there is net benefit. So we will advise to have internal transfer instead of buying the material from external market. So this is goal congruence, overall profitability of entire organization. If you want to achieve the overall profitability of entire organization, it is good to transfer the goods from one division to another division instead of buying the material from external market. Okay, so this is the condition we have here. Okay. So you can see in the answer, it is overall beneficial after considering the tax. It is overall, this is the contribution of division A. This is the loss of division B. So there is net profitability of this, and it is advisable therefore to transfer the goods from one division to another division. Okay, I hope it is clear. And I expect all of you to please read this question. If my speed is fast, you can tell me that the speed is fast. Okay, but we have a question to discuss. We have many questions to discuss. Read this question and please tell me if you have done the reading of this question. Again, see, this is the question of transfer pricing, same question as we have done in previous session, but here divisions are in different countries, so we have to consider the foreign currencies and the taxes in different countries, okay, while deciding the transfer pricing. So this is how the question will get affected if we have division in different country and we need to find the transfer pricing, okay. So Ambika has done the reading, but I expect other student also to please read this question. I expect other student also to read this question. And please quickly tell me if you have done the reading. We have many questions to discuss in today's session. Okay, shall we discuss? Shall we discuss? Yes or no? Tell me quickly. Shall we discuss this question? You have done the reading? Okay, now let us discuss this question. Standard Corporation Incorporation is a US-based multinational company engaged in manufacturing and marketing of printer and scanner. Okay, so there is a company. This company is manufacturing printer and scanner. It has subsidiaries spreading across the world, which either manufacture and sell printer and scanner using the brand name of SCI. The Indian subsidiary of the SCI buys an important component for the printer and scanner from the Chinese subsidiary of the same multinational group. The Indian subsidiary buy 150,000 units of the component per annum from the Chinese subsidiary at CNY rupees 30 per unit and pay total custom duty of 29.5% of value of the component purchase. So you can see here, we have Indian subsidiary. This Indian subsidiary is buying 150,000 unit from China subsidiary. Okay, and the transfer price is CNY 30. This is the currency of China, plus 10% plus 29.5% custom duty. Okay, so at this price they are transferring the goods from China to India. Okay. Okay. Now, a Japanese multinational company which manufacture the same component which is used in printer and scanner of SCI has manufacturing unit in India. So there is a Japanese multinational company which has a unit in India and which manufacture the same product as they are receiving from China subsidiary. Okay. And is ready to supply this Japanese multinational company is ready to supply the same component to the Indian subsidiary at rupees 320. So this Japanese company is ready to supply it at rupees 320, while Indian subsidiary is receiving the same product from China subsidiary at 30 CNY currency of China plus 29.5%. So Indian subsidiary have two options: either to receive the goods from China, from Japanese multinational company, or they have option to receive the goods from China subsidiary. They have these two options. Okay? They have these two options. The SCI is examining the proposal of Japanese manufacturer and asks its Chinese subsidiary to present its view. Now, this overall company is examining SCI, the overall company is examining the situation, and they are asking this Chinese subsidiary that China to express their view. The Chinese subsidiary of SCI has informed that it will be able to sell. Now, this China company is saying, this China subsidiary is saying that instead of supplying 150 units to them, we have option to sell 120 units in our external market. How much? At rupees 30 CNY and 10% tax. We have option to sell the product in this market. Okay, and the variable cost is 20 CNY. Okay, and they're saying that fixed cost will remain same. So see the condition we have here in this question. Okay, what are the conditions which we have here in this question? What are the conditions which we have here in this question? We have a company which has subsidiary in China and India. Okay, we have a company which has subsidiary in China and India. Okay, now you can see here that China is supplying the goods. China subsidiary is supplying the goods to Indian subsidiary. The number of units which they are supplying is 150,000 units, and the transfer price is this 30 CNI China currency plus 29.5% custom duty. Okay. On the other hand, Indian subsidiary have option to buy the same good from external market. In external market, there is Japanese subsidiary. There is Japanese multinational company which can supply them the same product at rupees 320. So Indian subsidiary have two options: either to receive the goods from China subsidiary or buy the goods from Japanese multinational company. They have two options. Okay. Similarly, China subsidiary have two options: either to transfer the goods to Indian subsidiary or to sell the goods to external market. Okay. So both of the company have two options. Okay. Now, what is the requirement of the question? Prepare a financial appraisal for the impact of the proposal by the Japanese manufacturer to supply the component to Indian subsidiary SCA. So you have to prepare a financial appraisal and you have to tell them the proposal of Japanese manufacturer is good or not, whether it is good to receive the goods by Indian subsidiary. See, what will happen in case if we receive the goods from Japanese multinational company? They are asking you to evaluate this. If you receive the goods from Japanese, if Indian subsidiary will receive the goods from Japanese multinational company, in that case, China subsidiary can sell their output to external market. ठीक है, instead of supplying the goods to them. ठीक है, and you have to evaluate the situation whether it is good to receive the goods from Japanese MNC as compared to China subsidiary. ठीक है, and whether the situation is overall profitable for the company. You have to find out this. So I expect all of you to please, I hope this question is clear to all of you now. See, if you draw this question in this way, this diagram, it is very easy to understand the question. You can see that we have converted the entire question into this diagram. ठीक है, we have converted the entire question into this diagram. ठीक है, and after converting this entire question into this diagram, how easy it is to understand the question. And I expect all of you to do the same in examination also. First, read the question. ठीक है, first read the question carefully. Then try to make this diagram. ठीक है, then try to understand the situation. ठीक है, in this situation they are saying that instead of receiving the goods from China, is it good to receive the goods from Japanese multinational company? Because if you will receive the goods from Japanese multinational company, China subsidiary can sell the product to external market. So you have to evaluate the situation, and I want all of you to read this question again. I'm giving you 5 minutes to read this question again. ठीक है, understand this diagram and read it again. ठीक है, I'm giving you time again to read this question. I expect all of you to read this question again. ठीक है, and if you have done the reading, I expect you to do this question at your own. First, try to do this question at your own, then we will discuss. I want all of you to do this question at your own first. ठीक है? Now, what you will do, you will analyze the situation for this Indian subsidiary, whether it is good to receive the goods from Japanese multinational company or it is good to receive the goods from China subsidiary. Which one is better? Tell me. Whether it is good to receive the goods from Japanese multinational company, whether it is good, or whether to receive the goods from China. This is good. Which option is good? ठीक है, in which option you will have to pay less cost? Which option is good? Tell me quickly. I'm waiting for you to give me the answer. Which option is better? To buy the goods from Japanese multinational company or receive the goods from China subsidiary? Quickly tell me. I'm waiting for you to reply me. Analyze the situation of this Indian subsidiary. Okay. Are you reading this question? What are you doing? Please tell me. Are you reading this question, or you are solving this question? You are doing this at your own. What are you doing? Quickly tell me. Quickly tell me. You understand this question? See, it will be very difficult for me to explain if you will not reply. So please reply me quickly, or I think there is some problem because I'm not receiving any of your answer, any of your comment. I don't know why I'm not receiving any of your comment. Okay. You're trying to solve this question at your own. Okay. First, I'm expecting all of you to read this question, consider this diagram, read this question, very easy question. ठीक है? and try to find whether it is profitable for Indian subsidiary to buy the goods from Japanese multinational company or from China subsidiary. Which one is better? ठीक है? If you have done, tell me. If you want me to repeat, tell me. Evaluate the situation for India and for China, for both the division. Okay, quickly tell me if you have tried it at your own. You want me to do this? Quickly tell me, okay? I'm waiting for you to reply. You want me to solve this question or you are still trying to do this question at your own? Because I want all of you to read this question at your own, try to understand, try to solve this. Then I'll do this for you. Okay, first I want all of you to try it at your own. Try to solve this at your own first. Okay? I expect all of you to first try this question at your own. Okay? Prepare a financial appraisal for the impact of the proposal by the Japanese manufacturer. Impact of the proposal of Japanese manufacturer on your business organization. You have to prepare that. Impact of the proposal. See, it is mentioned here, impact of the proposal of Japanese manufacturer on your business organization. You have to find that. Okay. Shall we discuss this? Can you give me the answer if you have calculated any of the answer? Can you give me? Oh, I receive answer from Ambika. Very nice. You tried this at your own. It's very good that you tried at your own. Okay. Very nice. Where are other student? I'm expecting other student. Ravi Teja, Raman, where are other student? I expect all of you to give me the answer. Okay, let me discuss this question. Let us first understand the situation we have here. this question you can see what? In this question you can see that Indian subsidiary, if Indian subsidiary buy the goods from Japanese multinational company, if this Indian subsidiary buy the goods from Japanese multinational company, what will happen? On impact on Indian subsidiary. What will be the impact on Indian subsidiary if they buy their requirement of 1,50,000 units from the Japanese multinational company? ठीक है, what the cost they will incur? ठीक है, if they receive the goods from 1,50,000 from Japanese company, cost of purchase from Japanese company, what the cost they will incur? 320 into 1,50,000 units. So 320 is the cost per unit into number of units is 1,50,000 is the total number of units. ठीक है, which you are buying from Japanese multinational company. So what is this cost? This cost is what? This is the cost we have. Cost of purchase from Japanese. This is the cost which we have. If we buy the goods from Japanese company, what else is mentioned here? ठीक है, this is the price we have to pay if we buy the goods from Japanese company. What if we buy the goods, if we receive the goods from China subsidiary, what price we have to give? Cost of purchase from China, from Chinese manufacturer. If you receive the goods from Chinese manufacturer, what will you have to pay? What the cost you have to pay? For 150,000 units, you will pay 30 yen CYN currency. For 1,50,000 unit, how much you are paying? 30 China currency, but we have to convert them into rupees. How will we convert? We will see the change in currency. In 1 CNY, there is 9.8 rupees. Okay, so we will multiply this with 9.8 in order to get the amount in rupees. Okay, we want it in rupees, so we will convert it in 9.8. Okay, so this value will arise as 441. Okay, this is the value we will get here. Okay, but when we receive the goods from China subsidiary, we have to pay custom duty of 29.5% also. So the cost will include this custom duty of how much? 29.5%. Okay, we will receive this. We will incur this. Okay, so you can see that if you buy the product from Japanese company, you have to incur this cost. And if you buy the goods from China subsidiary, you have to incur this 571,095. You can see, if you buy the goods from China, subsidiary, you have to pay more cost. So you can see here that if we buy the goods from Japanese, then it will be beneficial for Indian subsidiary. How much benefit, how much saving the Indian subsidiary will have? Saving on purchase cost. How much saving is there? You can see here the saving is the difference of these two values. What is the difference of these two values? 9,109,500. You can calculate it. This is the difference. This is the saving of what Indian subsidiary. If Indian subsidiary, instead of receiving the goods from China subsidiary, the division of the company, instead of receiving 1,50,000 yahan se, instead of receiving this, if you are buying the goods from Japanese multinational company, in that case, that will result in saving of cost this much. ठीक है, but on that saving you have to pay tax 34% in India. ठीक है, so we will subtract this less corporate tax. How much? 34%. You have to pay this corporate tax. ठीक है जी, you have to pay this corporate tax. How much? 34%, which is 30,97230, this value. So the net saving after tax, saving of Indian subsidiary, if they accept the proposal of Japanese multinational company, what will be the saving? 60,12270. This is the saving of Indian subsidiary if they accept the proposal of Japanese company, means they are buying the product from Japanese multinational company. This is the saving. ठीक है, this is the saving they are having. ठीक है, this is the saving. Okay, this is the saving. Now let us see the condition of China. Since you can see, if you are not transferring 1,50,000 units, if China subsidy is not transferring this 1,50,000 units because India is buying the product from Japanese multinational company, China is not transferring the goods to Indian subsidiary. Now China can sell these 1,20,000 unit in external market. ठीक है, they can sell the product in external market. ठीक है, now if they are selling this product in external market, they are losing something here. What loss they are incurring? What China is losing? You can see there is loss of sale. Previously they were selling 1,50,000 units, now they are selling 1,20,000 units. So there is loss of this revenue which they were earning here. How much? Previously they were having revenue on 1,50,000 units, now they are losing this revenue. ठीक है, how much? 1,20,000. On 1,20,000 they can sell it to external market, but they are losing on the difference value, because now previously they can sell 1,50,000 units, but now they are selling just 1,20,000 units. So the remaining balance unit is now spare units, unused capacity, 30,000 unit, on which they are losing their contribution, How much contribution they are losing now? Because now this is a spare capacity. This is now a spare capacity. So in this, they are losing the contribution. How much? The selling price is 30 and the variable cost is 20. So they are losing contribution 10 yen. ठीक है? This Chinese currency, CYN. ठीक है? So 10 CYN. We will multiply this to convert it into rupees with 9.8. ठीक है? 9.8. So in this way, we can get the loss on the spare capacity now, which previously China was not having. ठीक है? I hope it is clear to all of you. ठीक है? This is the loss. ठीक है? And since the China is selling 1,20,000 unit, and on that they are paying 10% extra tax. So we have to consider this is increasing their cost. On 1,20,000 tax, I'm considering the tax on 1,20,000 units. ठीक है? On 1,20,000 units, they are paying how much? 10% of 30 rupees, 30 CYN currency. 30 CYN currency, they are paying 10% of tax. Okay, and I want to convert it into rupees, so I will multiply this with 9.8. So in this way, we will get the value of tax they are paying. Okay, so this is the loss See, this is the loss of contribution and this is the additional tax they are paying. Again, a loss, a kind of loss. So they are having the total loss. Okay, total loss. How much? This is the loss of China company, the total loss of China company. You can calculate this value. Tell me the value. And in this, they will have tax saving. Okay, tax saving. How much tax saving? 25%. Okay. So after considering the tax saving, you will calculate the net loss of China subdivision. The net loss of China subdivision. So you can see then that Indian subsidiary was saving this money. And from here, you can calculate the loss to China division. So after considering the profitability of Indian subsidiary and after considering the loss of China subsidiary, calculating both, you will get the net benefit or net loss of entire organization. I hope it is clear to all of you. You can ask me question. Okay? In case if you have any doubt, you can ask me. If it is not clear, you can ask me. Okay? If you want me to repeat, you can ask me. We can do this again. Okay. Where are other student? I expect other student also to solve this question at your own. Okay? Give me the answer. I got answer from Ambika. ठीक है. Give me the answer. Calculate this value. I'm waiting for you to give me the answer. Calculate. See, in this case, you can see here that Indian division is having profit and China subsidiary, India subsidiary is having profit and China subsidiary is having loss. Okay? You can see in this case, Indian subsidiary is having profit and China subsidiary is having loss. So net, the entire organization will have either profit or loss. You have to calculate that. Entire organization will have either profit or loss, which you have to calculate. Give me the answer. What is the loss at this place? Can you give me this answer? So this total loss is 6468, this value, and 25% of this value is 1617, this value. Net loss is 4851, this value. Considering the profitability of Indian subsidiary and the loss of China, okay, you will get the net benefit. Okay. So the saving from Indian subsidiary is 60,12270. Okay, this is the saving of Indian subsidiary. Loss of China subsidiary is what? What is the loss of China subsidiary? This is the loss of China subsidiary. Okay. 4851. This is the loss of China subsidiary. So the net benefit to SCI group, the entire organization. The net benefit is 1161270. This is the net benefit. This is the net benefit they're having. Okay. I hope the question is clear to all of you. In case if you have any doubt, you can ask me. I know the questions are quite tricky in today's session. Okay, so I received right answer. Very nice. Now let us do the next question. We have a next question. So let us do the next question. Again, this question is related to international transfer pricing. But let me see if it is related to some other topic also. No. No. Okay. Now I expect all of you to read this question. I'm giving you 5 minutes to read this question. Read it. Read this question.
सीरियल में बतायो तो गुजराती ये ओछो बने तो वजन
Please read this question. Read this question. Okay, Ambika is saying, ma'am, as you say, 50% answer is in question, which applies to all other subject also. See, I don't know about other subject, but yes, if you read the question very carefully, I'll assure you that yes, it is very easy to solve the question. Everything is written in the question. You just need to link between everything. You know? So always try to read the question very carefully, and especially if you are doing the question in transfer pricing, please try to make diagram like this. Okay? If you will solve your entire question and if you will make a diagram of transfer pricing like this, it will help you to understand the entire question and to do that question. Okay? So that will help you to understand and to do the question. Okay? I expect all of you to read this question. If you have done reading of this question, please let me. Please read it. I'm waiting for you to reply me that you have done the reading of this question. Okay, is there any disturbance? Read this question and tell me if you have done the reading of this question, because I'm waiting for you to tell me that you have done the reading of this question so that we can discuss this question. Read this question. If you have done reading, please tell me that you have done the reading of this question so that we can discuss. Okay, I hope you have done the reading. Can you do this question at your own? We have done 2 questions related to transfer pricing. So can you do this at your own? Okay, now let us understand. I think it's enough time to read this question. Now let us understand. ABC Minor operates 2 divisions. One in Japan and another one is in UK. So there is a company which has 2 divisions. One division is in Japan and another division is in UK. Mining division is operated in Japan, which is rich in raw emerald. Okay, so they have a mining division which is in Japan, where they can get this mineral. Okay, this product. Okay, the other division is in UK. Okay, which process this product. Okay, it process the raw emerald into polished stone fit for human wearing. So what happened? This division, they mine it, they find and mine it, and then UK division, they process it, they polish it for the use. Okay, so we have 2 division. Okay, this company have 2 division. One division is in Japan and another division is in UK. Okay, the division in Japan, they do the mining process. Okay, the mining of this product, and the division in UK, they do the polishing of this product. So in this way, you can see here that you have 2 divisions. Okay. Now the variable cost of Japan is this, and the fixed cost of Japan is this. Okay. Similarly, the variable cost of UK is this, and the fixed cost of UK is this. Okay. So we have all these information here. Now, several polishing companies in Japan buy raw emerald from other local mining. So they are saying that there are several companies in Japan, this place, which buy the raw, the mining product which they have found, this Japan division, they buy it from Japan division. Okay? And what are the price at which they buy this product from Japan division? It is 9,000 yen per carat. Okay? At 9,000 yen per carat, they buy this product from Japan division. Okay? This is the information we have here. Okay? Means the Japan division have option to sell the product in external market at 9,000 yen per carat, and they also have option to transfer this product to UK division. So they have 2 options. Either they can sell this product in external market, or they can transfer this product to UK division. They have these 2 options. Okay, this Japan division have these 2 options. Okay, I hope it is clear. Now Now current foreign exchange rate is this. Okay, in 50 yen there is 1 pound. Okay, it is given here. Now income tax rate is 20% for Japan and 30% for UK. Okay, so income tax rate is 20% for Japan and 30% for UK. You can see how easy it is to understand the question if I have this diagram. How easy for me to understand this question. Now it take 2 carat of raw yellow emerald to yield 1 carat of polished stone. So this one finished good require 2 raw material of division, Japan division. ठीक है, one finished good need 2 raw material of Japan division. ठीक है. The polished emerald sell at 3,000 pond per carat. Now the polished product you can sell in the market at rupees 3,000 pond per carat. Okay, this is the information we have. These all are the information we have here. Now let us see the requirement of the question. Compute the transfer price for 1 carat of raw emerald transferred from mining division to processing division. Okay. Now you have to calculate the transfer price at this place. Okay. So the first method is full cost method and another method is market price method. So first you tell me the transfer price which you want to quote here. Okay. Tell me the transfer price which you want to quote here. Tell me the transfer price which you want to quote here. I'm waiting for you to first give me the answer. Okay. The requirement of the question is that you want to find the transfer price this at this place. Okay. What transfer price you can quote? 200% of full cost. So in first method, you have to first find the full cost. Okay. Then multiply it with 2. Okay. You will get the transfer price. And the second method is what? Second method is market price. Okay, market price is transfer price. So I hope you can give me the answer. I'm waiting for you to give me the answer. Very easy, but I want all of you to give me the answer. I expect all of you to give me the answer. Okay, I got answer. ठीक है. So I received the answer from Ambika and she's saying 15,000 yen. Okay, this is the full cost method transfer pricing. What is the transfer pricing in market price? If it is market price, let me solve it for you. What is the full cost of this product? The product which Japan division is manufacturing. Okay, what is the full cost? The variable cost is this. What is the fixed cost? You can see here, this is the variable cost of the product which you are manufacturing in Japan division, and this is the fixed cost of the product which you are manufacturing in Japan division. So what will be the total cost? Total cost will be these two. If you will add these two value, you will get the total cost. Okay. So the full cost, the total cost will be what? 2,500 yen plus this is the variable cost plus fixed cost is what? 5,000 yen. So this is the full cost. Full cost means you are considering the variable cost and fixed cost, which is 7,500. This is the full cost. Now the transfer pricing is what? Transfer pricing is 200% of the full cost, means 200% of full cost means 2 times the full cost. So 2 times of this value. This is the transfer price in first case, 15,000 yen. You can convert it into rupees. How can you convert? You can convert it into pound. Okay, by dividing it with 50. So you will get the value in pound. Okay. You can get the value in pound. I don't know. You can calculate this value and you can give me the value in pound. I think this is pound. Okay. So this is the value which we have here, pound in pound. Okay. Now, if the transfer price is the market price, transfer price is market price. What is the market price of the product we have here? For this product, the market price is this 9,000 yen per carat. Okay, so 9,000 yen per carat is the transfer price. Okay, and you can convert it into pound. 9,000 divided by 50. So you can get the value here, which is 180 pound. So this is the value we have here, 180 pound. I hope it is clear. Okay, so in this way, you can calculate the transfer price using the full cost method, transfer price using the market price method. It is clear. I hope it is clear. I hope it is clear to all of you. Next portion of the question is what? This is the next portion of the question. But let me see first your queries, if you have any queries. Okay, I got answer. Very nice. Okay. So in this way, you can get the transfer price. Okay. Now, the next portion of the question, let us see the next portion of the question. What is the requirement of the next portion of the question? 1,000 carats of raw material of this emerald are mined by Japan mining division and then processed and sold by the UK division. So we have this Japan division which is mining 1,000 carat of this product and which is sold by UK division. UK division. Okay, UK division is selling how much? They are with 2 carat, they are producing 1. With 2 raw material, they are producing 1 finished good. So out of this, they will produce how much? 500 carat of final goods. Okay. They will produce 500 carat of the final goods. Okay. And sold it into the market. Now, compute the after-tax operating income for each division. Now, you have to calculate the profit of each division. Like if Japan division is selling or transferring 1,000 carat to UK division, and if UK division is selling 500 carat to final market, okay, in sale market, they are selling 500 carat. What will be the profitability of both Japan division and Japan division and UK division? What will be the profitability of both division, Japan division and UK division? Okay, can you calculate it? I want first all of you to calculate it at your own. For that, what you will have to consider for this selling price, selling price, UK division will consider the selling price, Japan division will consider the transfer price. ठीक है, for 1000 units, for 500 units. ठीक है, then they will consider all the cost. ठीक है, all the cost. ठीक है, this cost will include this transfer price and then the profitability. Can you calculate it at your own first? Then we will do this. ठीक है, can you calculate this at your own? You have to consider the selling price, then the variable cost is given here, fixed cost is given here, the cost is given here. You have to consider all those costs. ठीक है, fixed cost, variable cost. ठीक है, tax is given here for both the division. Consider that, find the total profit. ठीक है, for both the divisions. Calculate it. Can you do this at your own? Can you do this? You have to consider the selling price of both the this division, like selling price is this given and the transfer price of this division. Then you have to consider the variable cost of both the division, then fixed cost of both the division. Let me do this. Let me do this. So you can see the selling price of UK processing division is what, and the transfer price of the Japan is what. ठीक है, you can see these information. We have this information. Selling price per carat is given here, 3000. ठीक है, 3000 pound, and the transfer price of UK division is what? Is 15,000. Full cost method, in full cost method this is 15,000. ठीक है, so we are considering that. ठीक है, we have to calculate this value for both full cost method and market price method. Means we have to do this calculation twice, once considering the transfer price as full cost method and another calculation for market based method. We have to do this calculation twice. ठीक है, one for full cost method and another for market based method. So we can do one thing, we can make two columns here. In one case we will consider the full cost transfer price, and in other case we will consider, for example here we are considering full cost method. ठीक है, and here we are considering the market price transfer pricing. ठीक है, we have two different transfer price, and for this our profitability will be different, and for this our profitability will be different. ठीक है, so if the transfer price is full cost, that is how much? 15,000 Japanese currency and 9,000 Japanese currency, that is market price yen. ठीक है, So for that we are considering here the value. Okay, what is the value here? We have 15,000 transfer price, and at this place what is the value here? 9,000. Okay, these two value. Okay, and what is the sale price? Sale price in both the cases is 3,000 pound per carat. 3,000. What is the value of this in pound? ठीक है, in pound, in UK currency we will consider the value of this in pound. ठीक है, so divided by 50 you will get the value in pound, which is 300. ठीक है, 300 pound. But since for two raw material we are using in one finished good, so at this place we will use two raw material, so we will multiply it with two raw material we are using. Okay, so the cost of this will be 600 pound. Okay, similarly for this we will consider it in pound, and in pound this value will be how much? 180. Okay, we will multiply it with 2 and we will get the value 360. We will get this value 360. Okay, we will get this value 360. So in this way, since we are transferring this goods to this division, so this is the revenue for them, but at the same time this will be the cost for UK division. Similarly, this is the revenue for this division, but this will be the cost for this division. Okay, now let us consider the other cost. Like we have the variable cost, we have the fixed cost. Okay, per unit. What are the variable cost? 2,500 yen and 5,000 yen. Okay, 2,500 yen is the variable cost and 5,000 yen is the fixed cost. Okay, 2,500 yen is the variable cost and 5,000 yen is the fixed cost. Similarly, for this division, UK division, 150 is the variable cost, 350 is the fixed cost. So 150 is the variable cost and 250 is the fixed cost. Okay, sorry, 350 is the fixed cost. 150 is the variable cost and 350 is the fixed cost. So we have these costs. Okay, we have considered the revenue, we have considered the cost. So in this way we will get the profit before tax. Okay, we will get the profit before tax and then we will consider the tax. Since it is different in different country, in Japan the tax rate is what? 20%, and in UK the tax rate is 30%. So we will consider that. Okay, so in Japan the tax rate is 20% and in UK the tax rate is 30%. We will consider that. First we will calculate the profit before tax. This value is 6,000 Japan currency, yen, 1,200 yen. Okay, if we consider the value here, the profit in pound, if we are transferring the value in full cost method using the full transfer pricing as full cost method, this value will be 1,330 here and 1,498 at this place. So this is the profit before tax. We will subtract the tax, value of tax. At this place, the tax is how much? I guess these values are incorrect. Please calculate these values and let me know. This is 7,5. This is 1,5. This is 1,9. This is 2,140. Okay, this is in yen, and this is in pound. Okay, these values are in pound. Then consider the tax. So these are the value of tax. So after this, we will get profit after tax. What will be the value of profit after tax? 6. These are the value profit after tax. Okay. You can see here the raw amaranth, you are using 1000 carat. You are using 1000 carat here. But since out of 2, you are producing 1 finished good. So here you have 500 carat finished good. Okay. At this place, you have 500 carat finished good. Okay. So total profit after tax, multiply them, you will get the total profit. Okay. So at this place 60 lakh yen, at this place 12 lakh yen, 665,000 pound, and at this place 749 pound. Okay. Now convert these yen into pound in order to find the correct, in order to correlate them and to give the answer. Convert yen into pound, means divide them with 50, divide them with 50 so that you can convert them into pound. This value is 120 pound. This is 24,000 pound. This is 665 pound. So from here you can calculate, in case if you are transferring, if the transfer price is full cost method, add them, find the total profitability, and in case if the transfer price is market based, add them and get the total profit of the organization. I hope it is clear to all of you. In case if you have any doubt, you can ask me. You can see this calculation again, and in case if you have any doubt in this question, you can ask me. Any question, anything related to anything, any question related to anything, you can ask me. If you have any doubt, you can ask me. Okay, I got answer from Ambika. I'm waiting for other student also to give me the answer. I hope it is clear to all of you. In case if you have any doubt, you can ask me. You want me to wait or you want me to proceed to next question, next part? Tell me quickly. Are you still doing this question or you want me to proceed to next question? I hope you have done this question. Let us proceed to next question. Let us proceed to the next question. I hope you all have done the question. No query from your side. No query. Okay, one more topic left, so I want to cover that topic. This topic is related to resolving the conflict. Okay. This topic is related to resolving the conflict. We have two division, Division A and Division B. Okay. Manager of Division A is transferring the goods to manager of Division B. The manager of Division A always wants to keep the transfer price high in order to get in order to show in better performance evaluation, and in order to get better incentive, manager of A always want to get high transfer price. On the other side, the manager of division B always want to get the material at low transfer price in order to improve their own profitability, the profitability of their own division. So there might be condition where the conflict between these two divisions will arise. Okay, the conflict between these two divisions will arise because one person want to keep the transfer price high and the other person want to keep the transfer price low. So in this way, the conflict between them will arise. Now in this case, we have two division, the management, the entire organization, the top management of the entire organization will have to interfere and will take the decision, will interrupt and will interfere to decide the transfer price. Okay, in order to resolve the conflict between them. So here we have two method which we can apply if in case there is conflict between the two division. Okay, so conflict, in order to resolve the conflict between the manager of two division regarding the transfer price, we have the two methods. First method is dual rate transfer price system, and the second method is two-part transfer pricing system. Okay, we have these two methods to resolve the conflict. Now let us understand how with the help of dual rate transfer price you resolve the conflict, and how with the use of two-part transfer pricing system you resolve the conflict. Okay, let us see. So the first method, see, we have two division A and division B. Okay, and we want to decide the transfer price for the product which we are transferring from division A to division B. Okay, manager of division A always want to keep the transfer price high. Okay, this person, the manager at this place, always want to keep it high. Okay, always want to keep the transfer price high. The manager at division B always want to keep the transfer price low, minimum, low. So there is conflict. Okay, why low? Why low? Why this management want to keep it low? Because it is cost for them. And why manager of division A want to keep it high? Because it will create revenue for them. This will increase their profitability. This will help them to increase the profitability, and both the manager want to improve their profitability in order to get high incentive. Okay, so in this case, in order to achieve the goal congruence, means the profitability of entire organization, in order to get the profitability of entire organization, what you can do here, what you can do. So let us see. The supplying division record transfer price by including the normal profit margin, thereby showing the reasonable revenue. So this is the supplying division. This supplying division will represent the transfer price as the price which will include the profit margin. Okay, the price, the cost plus any profit margin. All the cost plus profit margin. He will keep the transfer price like this. Okay, and the purchase division, this purchase division will record the transfer price at marginal cost. Okay, at marginal cost. Okay, so in this way, this division has recovered all the cost plus profit margin. Obviously, it will be acceptable for the manager of division A, while division B is accepting the product at marginal cost. Obviously, this is the lowest price for the product, and hence he will be agree to receive it. Okay, so in this way, both of the manager of both division will be happy receiving the goods. Okay, both of them will be happy. So this will improve the cooperation between the division. It will help you to achieve the goal congruence, the entire organization profitability. and it will reduce this, it will help you to use the resources in best possible manner, because it is good to use the entire resources. ठीक है, we generally avoid to have unused capacity. ठीक है, we generally avoid to have unused capacity in the organization. ठीक है, now what are the drawback of dual price strategy? The profits shown by the division are artificial. ठीक है, it might be possible that the profit which you are watching here in both the division, they might be artificial. The actual profit might be different. ठीक है, and it is complicated to apply this method. ठीक है, so this is the first method of deciding the transfer price if there is conflict between the manager of two division. ठीक है, and it's a dual rate transfer pricing method. ठीक है, now the next, resolving the conflict between the manager of two division. The next method is two-part pricing system. This pricing system is again used to help to resolve the conflict between the manager of two division, division A and division B. ठीक है, we have a manager here and manager here, both of them are conflicting for deciding the transfer price. ठीक है जी. Now in this case, how will you decide the transfer price? You will consider the marginal cost plus you will add some lump sum charges. ठीक है, that will recover the fixed cost and a profit also. ठीक है, that will recover your cost. So this way you can decide the transfer pricing, and we have these two methods in order to resolve the conflict and to decide the transfer pricing. Now this is the question of examination November 2017. ठीक है, so I want all of you to read this question, then we will discuss. This question is regarding resolving the conflict between the manager of two division. We have this question, and I want all of you to first read it at your own. Read this question, then we will find the way to solve this. Kunal, no doubt. See, Ambika is asking, in real life also, will they use this dual pricing method? See, in case if there is conflict between the managers, obviously they will use it. And it's very obvious that they may have this conflict regarding deciding the transfer pricing. Okay? So this condition may arise. And why you people are not replying? I'm waiting for you to reply me. Okay? That make the session interesting. Okay, at least it will help me to understand whether you are getting me or not. Okay, so please keep replying me. I hope I want all of you to read this question. I'm giving you time, 2-3 minutes to read it and tell me, ma'am, that we have done the reading of this question, and please proceed. Okay, read this question. Tell me that you have done the reading of this question, then we will proceed. Read this question. Please tell me if you have done the reading of this question, because I want to discuss one more question. So I want all of you to do the reading of this question. Okay, shall we discuss? I lost the page. Okay, let us discuss this question. We have a company, Global Multinational Limited, which has two division DX and DZ. This company have two division DX and DZ with full profit responsibility. The division DX produces component X. Okay, this produce component X, which it sell to outside customer, only. Okay, they sell this to outside customer only. Division DZ produces a product called Z. Okay, they produce product called Z, which incorporates component X. Okay, this product incorporate product X in it. Okay, DZ division is currently purchasing required unit of component X per year from outside supplier at market price. Okay, so we have a question here that we have two division DX and DZ. Okay, and DX, they're selling their entire unit to external market. This division is selling their entire unit to external market. Okay, they're producing product X. Okay, while DZ is producing product Z and they are purchasing this product X from the external market. They are buying this from external market. Okay, this division is selling this to external market and they are buying this from external market. Okay, now new CEO for Indian operations has explored the division DX has enough capacity. See, it is mentioned here. It is very important to mention here that this division have unused capacity, enough capacity. So we should try to use the capacity in best possible manner. We should not keep the unused capacity. है ना? This is what we have studied. Use your resources in best possible manner. If there is unused capacity, produce the goods and transfer the goods at marginal cost. This is what we have studied. So in this case, you can see here that if your division DX have external market, but after selling the goods in external market, you still have unused capacity. You still have enough capacity to produce the goods, produce them for division DZ and supply it the minimum price marginal cost. Okay. However, there is conflict between the manager of these two divisions. Okay. So there is enough capacity to meet the entire requirement of division DZ, and accordingly, he require internal transfer between the divisions at marginal cost from the overall company's perspective. So you can see here, this is the condition. I hope you have studied so far. It is very important to understand this. We have studied this so far that in case if we have unused capacity in the supplying division, then use that unused capacity, and what will be the minimum transfer price in that case? Marginal cost. है ना? Otherwise, what is the transfer price? Marginal cost plus opportunity cost. But since they have unused capacity, there is no opportunity cost. ठीक है? So use the marginal cost. है ना? And this is what the CEO of the entire company is saying, that in order to achieve the goal congruence, in order to improve the profitability of entire organization, what you should do, you should transfer the goods from division DX to division DZ at marginal cost. Okay. The manager of DX claims that transfer at marginal cost is unstable for the performance evaluation. Now, divisional manager of division DX, he is saying, no, this will reduce our performance. Okay, we want to achieve the best performance. ठीक है, but if you will reduce our transfer price to marginal cost, then what will happen? Our performance will reduce. ठीक है, so this is not suitable for the performance evaluation, so we will not agree. ठीक है, so this manager is saying I'm not agree with this, I don't want to transfer the goods in marginal cost. ठीक है, so he's saying that there's enough capacity to meet the entire requirement of division DZ, and accordingly he require internal transfer. Sorry, unstable. Since they don't provide the so because why he's saying that I won't, that it is not suitable for the performance evaluation, because this will reduce their incentive. Okay, this will reduce their incentive. Okay, if he will transfer the goods from division DX to DZ at marginal cost, this will be unsuitable for their performance evaluation, and this will reduce the profitability of this organization, and accordingly this will reduce the incentive of this division DX. Okay. Now he stressed that transfer price should be cost plus markup. So the manager of DX, he is saying the transfer price should be cost plus some profit markup. Okay. So this is how the manager of division DX, though he has spare capacity, unused capacity, he's saying no, I want transfer price at cost plus markup. See, this is not good for the entire organization. This will reduce the performance of entire organization. है ना? New CEO worries that transfer pricing suggested by the manager of division DX will not induce the manager of both the division to make the optimum decision. So no optimum decision will take place, no transfer of goods will transfer from this place to that. And what will happen, though you can see that the profitability of division DX is good, but the entire profitability, the profitability of entire organization is not good. ठीक है, so you can see this situation is not good. Now I will take the query of Kunal. Kunal has asked me, ma'am, if the division transfer price, division A transfer the goods at cost margin, then how division B recorded below price? Now see, he is saying what we, in order to solve this, we have studied that transfer the goods for the manager, transfer the goods at cost plus some markup. ठीक है, for the manager of division DX, transfer it at this price, but for the manager of division DX, transfer it at marginal cost. Why? Because at this both will agree, the performance of both will see as good. Okay, the performance will look good for both of them. But my goal, if I'm the CEO of entire organization, my goal is not just, my goal is to improve the profitability of entire organization, and I want this manager to agree himself for transferring the goods from this place to this place. I don't want this manager to sell the entire product in the market, or I don't want this manager to have spare capacity here. ठीक है, unused capacity. I don't want my manager to have unused capacity here, and I don't want my manager of division DZ to buy the product from external market, because this will reduce the profitability of my entire organization. So I will ask them, okay, you want to improve the performance of your organization, keep this. ठीक है, cost plus markup. Okay, you want to improve the performance of your organization, keep this. But what is my concern? My concern is my entire organization. I just want them to transfer the goods from this place to that place. ठीक है, because if they will transfer the goods from this place, he will use the unused capacity and he will not buy the product from external market. So this way, my goal congruence, I can achieve my goal congruence, the profitability of entire organization. I hope the query of Kunal is solved now. I hope the query of Kunal is solved now. This is the solution. This is the answer of query of Kunal. You have asked me. I hope. Tell me, Kunal, your query is solved or not. ठीक है. So discuss the transfer price method to overcome the performance evaluation conflict. So the first method is to have this dual rate transfer pricing system. ठीक है, in which the supplying division will charge what? The supply division will charge what? Some profit margin, cost plus profit margin, and the purchasing division will record it at marginal cost. ठीक है, dual pricing method. Or the second method is what? Second method is two-part transfer pricing. ठीक है, in which you will transfer the goods at marginal cost plus some lump sum charges. ठीक है, so you can adopt any of these methods for them to agree them for transferring the goods from one division to another division, and to discourage them to discourage division DZ to buy the product from external market, and discourage the division DX to sell the product to keep this unused capacity here. We don't want unused capacity at this place. Okay, we want to use this capacity in best possible manner. Okay. So this is how you can do this question. I have one more question to discuss, and we have 4 minutes left with us. So I'm thinking whether we should take this question or not. Let me take that question. It's a big question, Val. So we have this question, and I want all of you to read this question. I'm giving you time, 2-3 minutes again, to read this question. Ambika is asking me that, ma'am, whether we have to prepare any reconciliation statement. See, if there is requirement, we will prepare that. I want all of you to please read this question. Oh, Kunal is saying that, ma'am, if it does not have the spare capacity, then division X transfer to division Z at marginal cost, but it reduce the profit of C. We have studied here what we have studied. They will not transfer the goods at marginal cost. They will transfer the goods at marginal cost plus some markup. See, wait. Where is the concept? Read that question which I have shown you. Yeah, you can see the method of transfer pricing. What is the method of transfer pricing? Transfer price include the normal profit margin, means the cost plus profit margin. For this cost plus some profit, he will be happy because he is receiving the profit. And for him, variable cost, marginal cost, he will be happy because the cost is less. Please do the next question. Please read this question. We have this question with us. Okay, GL Limited is a multi-product manufacturing concern functioning with 4 divisions. It has 4 divisions. Okay, I don't have image here. Okay, 4 divisions. The electrical division of the company is producing many electrical products, including electrical switches. This division, functioning at a maximum capacity, sell its switches in the open market at rupees 125, and the variable cost is this. So you can see here that we have electric department, electric division. Okay, and this division is selling the product in external market, and the selling price is rupees 25. Okay, and the variable cost is what? Variable cost for them is rupees 16. Okay, this is the variable cost and the selling price. Okay, the household division, and we have another division, household division. We have another division, household division. Okay, this household division is producing what? Lamps. Okay, and they are using the switches from the electric division. Okay, the household division, another division functioning at 70% of the capacity, asked the electrical division to supply 5,000 switches. They are asking them to supply 5,000 switches. Okay, they're asking them to supply 5,000 switches per month at the rate of rupees 18. Okay, to fit the night lamps. Okay, produced by it. The total cost per night lamp. Now, this is the cost of this product which you are preparing here, lamp. Okay. The component which you are using, the switches you are using, other variable cost, fixed cost, total cost of the night lamp. The household division is marketing the night lamp at rupees 130, and you are selling this product in the market at rupees 130. Okay, with a very small margin, as it is doing business in a very competitive environment. Any increase in the price made by the division will push out the division from the market. Now he's saying if you will increase the selling price of this lamp, nobody will buy your product. Okay, so you cannot increase the selling price beyond this. Okay, so you cannot increase the selling price. We can conclude here that we cannot increase the selling price of the final product which we are manufacturing in household division. Okay, therefore the division cannot pay anything more than switches. So that is why he's saying that, see, we cannot pay you anything more than rupees 18, because our cost is 129 and we are just earning rupees 1. Okay, so we cannot increase this price. Okay, we cannot pay. He's saying that, see, we cannot pay more than 18 rupees to you, the manager of this division. He's saying that we want your switches, but we cannot pay more than 18, because if you will ask us to pay more, in that case we will not earn any profit, or we will incur loss, and then we cannot increase the selling price of the product which we are selling, and it might be possible that we will be out of the market. So this is the condition they have. Now, would you recommend the supplying division of household by electric division at rupees 18? Okay. Now you tell me whether this electric division will agree to supply this product at rupees 18 or not. Whether he will agree to supply this at rupees 18 or not. We have electric division here, we have household division here. Household division is selling the product at rupees 130. Okay, total cost is 129. He is earning just profit 1. So he is saying, since we are earning 1 profit, we cannot increase the price beyond 18 rupees. Okay, now tell me whether electric division will agree to supply this product switches to household at rupees 18 or not. Whether he will agree to supply it at rupees 18 or not. You can read this question again and give me the answer. Can you give me quickly answer? We don't have time. Yes, ma'am, it will agree. between 18. Why he will agree? Kunal is saying he will agree. Why he will agree? See, electric division is selling its product in the market at this price. Okay? And it is clearly mentioned here, this division is functioning at its maximum capacity. Means the entire unit which they are producing, here, they are working at maximum capacity. Means what? The entire unit which they are producing here, they can sell it to the external market. There is no spare capacity. In case if there is no spare capacity, what will be the minimum price they will quote? The marginal cost plus the opportunity cost. What is their marginal cost? Marginal cost is rupees 16. What is the opportunity cost? The difference is the opportunity cost, 9 rupees. So they want to recover this price, which is rupees 25. They will not agree to reduce the price beyond 25. They will not agree to reduce the price beyond 25, and hence the transaction will not materialize between them, because household division will not agree to buy the product at the price less than 18. Sorry, at the price more than 18. He will not agree to buy the product at the price more than 18, while he will not agree to transfer the product at a price less than 25. So this will not materialize between them. Okay. Now the next question, analyze whether it would be beneficial to the company as a whole to supply the switches to household at rupees 18. Now the next question he is asking, whether as a whole it will be beneficial if you force this person, at this place to transfer the goods, at 18, whether it will be beneficial for the entire organization or not. Oh, yeah. See, if we consider this proposal as a whole for the entire organization, what we can see here, we can see here the selling price of the final product is 130. You can see here that the selling price of the final product is 130. Okay? And the variable cost is this. Okay? The variable cost is this. Okay? And other variable cost is this. Okay? And if we transfer the goods, would you recommend to supply the switches? If we take the goods at 25, what will be the contribution to the organization? In this case, 15 rupees will be the contribution for this division. Where is the diagram? God, no, there is no diagram. So for this, they want to quote this 15 rupees per unit. Okay? They can quote maximum this price for this lamp. It will not be beneficial. Okay. See, when you are writing me the answer, please give me the answer like you are writing the answer for first point or the second point or the third point so that I can recognize your answer. Okay. Otherwise, I'll not be able to understand the question. See, this is so. Give me the answer like you are writing the answer for first part, second part, third part in this way so that I can understand that you are giving me the answer for what. Okay. Otherwise, it will be difficult for me to understand. See, in the second situation, they are asking you that whether it will be beneficial for the company to transfer the goods at 18. Give me the answer of second if you can give me the answer. See, if you ask them to transfer the goods internally, if you ask them to transfer the goods internally, then the selling price is this. Okay, this is the variable cost. This is the price at which you will get the product, and there will be profitability of this, and so you will allow them to transfer the goods. Okay. I'm discussing the last portion, such as the step to be taken by the chief executive of the company to change the attitude to divisional head if they are against the internal divisional transfer. Means you want to transfer the goods from one division to another, and if there is any conflict and they don't want to transfer the goods, in that case you can suggest them these 2 points. What in order to resolve the conflict, you can suggest them these 2 points. Yeah, these 2 points. Dual rate transfer pricing or two-part transfer pricing. Okay. In case if you have any doubt, you can ask me. Otherwise, we are ending this session. Can you quote the range of the transfer pricing for both the division? Can you see? I need time to solve this question. Can you quote the range of the transfer pricing between the division? See, this division want to charge maximum this division, electric division, want to charge maximum this. Okay, not more than he cannot transfer the product at a price. Sorry, he want to charge at least this and not below this. The manager of supplying all want to charge this and not below this. And the manager of household, how much he will agree to pay. For him, we will consider what for him we will consider the selling price. We will find the net marginal revenue selling price minus the variable cost we have. Okay, so the selling price is 130 and the variable cost is 50. Okay, and 40, which is the difference is 40. Okay, net marginal revenue we will consider for deciding the maximum value for this division. Maximum value, net marginal revenue, selling price minus the variable cost, we will consider that and we will find the value. Okay, so in this way we will find it. If it is not clear, please tell me. I will repeat. It is very easy to do this question. In case if it is not clear, I'll repeat it again. Okay, you can ask me. Okay, you have a doubt related to that. See, I will take this doubt later on. I think there is some doubt in this question. Let us discuss the range of the transfer pricing. The range of the transfer pricing, the minimum transfer pricing will be 25, because the manager of division, electric division, don't want this price less than 25, because they want to recover the marginal cost and opportunity cost. While for this purchasing division, we want to keep the price at net marginal revenue or external buying. There is no external buying price mentioned. The price at which he can buy the product from externally not mentioned. So we will consider the net marginal revenue. How will you calculate the net marginal revenue? For calculating the net marginal revenue, you will consider the selling price, which is 130, and all the variable costs. What are the variable costs? You have 50 and 40. You will consider them 50 and 40, and considering them, you will get this maximum transfer price, okay, which is 40 rupees. So in this way, you will get a range of transfer price from 25 to 40. You will get a range from 25 to 40. Okay. Okay, there is a doubt of Ambika. Let me take that doubt, then we will end the session. This doubt is related to second portion. She is asking me a doubt related to second portion of the question. See, in the second portion, analyze whether it would be beneficial to the company as a whole to supply the switches household at 18. See, you can see here that this manager don't agree to transfer the goods at rupees 18. He don't agree to transfer the goods at rupees 18. Okay, he don't agree. But if we force him to transfer the goods at rupees 18, then what happen? He will lose this revenue 25. Okay, he will lose it on the total sale. So if we have considered that yes, the total organization will earn a selling price of 130. Okay, and for that the variable cost will be what? The variable cost will be 50 and 40. We will consider that 50 and 40. And since you are doing the internal transfer, you are losing what? 25 rupees. So you want to recover all these. After considering all this, you can see that there is still profitability in the organization. Okay, so this is how you can write the answers. Okay, in case if you have any doubt, you can ask me. Otherwise, we are ending the session. Okay, you have doubt. It will not be beneficial. Yes. See, you are writing it will not be beneficial, it will be beneficial. I'm not understanding because you are not writing which answer, about which answer you're writing the answer. Okay, like write 1, 2, 3 so that I can understand. Not beneficial because contribution loss is 9. Raman. Okay. So I hope it is all clear to all of you. In case you still have any doubt, you can ask me, you can mail me, you can message me. Okay. Now let us end the session. Transfer pricing, the session of transfer pricing. Now in next session, we will study the next topic, next chapter. In case you still have any doubt, you can ask me. Okay. In next session also. Okay. I will see your query and we will reply it in next session. In case if you want me to do any additional question related to this, we can do it. Okay. So let us end the session and we will do in next session we will do the new chapter. ठीक है? Okay, good night. Thank you so much.